Well, good afternoon, almost evening, 5 o'clock. I think it's where that switches over from afternoon to evening. But either way, good afternoon, 5 o'clock, good evening, 5 o'clock. Some places, I guess, it's 4 o'clock, 3 o'clock, maybe even 2 o'clock, depending on where you are watching from. But I want you to know that you are welcome. You're welcome. You're welcome. Gotta turn on the fan. I turn the fan on and I'm a little warm, so I turn on the fan. And then as soon as the fan blows a little while, and I'm fine. And I want to turn the fan off. But I know after I turn the fan off, I'm gonna get hot again. So then I turn it back on. So I just leave it on. And then I endure the coolness, or I could leave it off and endure the warmness. But I think I'd rather endure the coolness more so than the warmness. So the fan will just stay on. I sure hope everybody's having a good weekend so far. I know it's starting to wrap itself up, weekend coming to a close. Hopefully, you look back and reviewed your trades from last week. And spent some time this weekend like woosahing, like, downtiming, away from the markets, away from the screen, away from all the things. And then, for me, usually I would say that Saturday, but generally, I mean, over the last month, I've been doing the charting challenge. So I've been spending time on Saturdays, even still doing market related stuff. Then I try to get away from the screen for a little while after that. And then on Sundays, I try to not try to do stuff in the morning that doesn't include a screen. And then I start, after that. But here we are. Doesn't matter. The whole point of that whole, discussion was that you get some time away from the screens or away from the charts or whatever, and you get something else going in your world that allows your brain a bit of a break, your nervous system a bit of a break, just gives you a chance to just chill out. Okay. Give you a chance to chill out. I'm letting YouTube, welcome Twitter, welcome Facebook, and welcome Instagram. Trying to welcome all the places here to join us this evening in the seller zone. Yeah, we're here to see what the market has to hold for us this week. What is it going to tell us? What's it going to share with us? What are we going to do in the market? Yeah. Uh-huh. So yeah, let's let's see, you know. There we go. So let's see. Let's see what happens. I'm going to see Twitter on my phone so I can make sure that it's going live, that it's showing that we're here, that we're live. We'll see what it says here. Our list is live. It didn't tell us. Will you tell us that we're live? It doesn't say. It's like, well, I don't know what you're doing. Let me see if I can see my own profile. If it's yep, it says I'm live. It says I'm live. Yeah, and I am. I'm live. Okay, so let's talk about what happened to the market last week. If you had some really good trades last week, I want to hear about them. You can put them in the comments. If you got a ticker you want us to look at, you can put that in the comments. Something you want to say, some way you want to engage, definitely feel free to join us in the comments, okay? Feel free. I can see the Instagram comments. I can also see Twitter. I can see Twitter comments, Instagram comments. I can see YouTube comments. I don't think I can see Facebook comments unless I go somewhere and look for them. But I think Facebook comments may be given to me so I don't have to go looking very far. Okay, let's share some screens and see what we saw last week. Last week. Okay, let's look at SPX. SPX last week. Let's go to the daily chart to see what we see here. Big numbers. Let's get maybe where we take off some stuff that will disrupt our watching. Okay, let's go with that. Alrighty, this was SPX last week. Let's look at the weekly chart first, I guess, and we can see what the weekly did. This green here was a weekly chart. Looks like that is a hammer on the week. Looks like that's a hammer on the week. Well, I might need to change my background to like a dark background. Let me see. What is the background? Solid. Yeah, I want it to be solid. Does it ask you for the light or the dark in the background? I know it's in here somewhere, but I'm not seeing it. If somebody knows where it is, y'all can tell me. Oh, wait, maybe this is it. Pow, look at that. Maybe not all the way black, maybe just a darker. Wah. Y'all see that? I got skills. They're multiplying. Yeah, I got skills, even though I can't see the numbers over here. So now what am I supposed to do over here? Can't see the numbers. They changed them. So now I need to go see the scale and the lines, and I need the colors. I'm not going to fix this now, but I wonder why it just didn't automatically switch to another color for me. Like, why didn't it automatically give me a new color on these lines? I'll come back to that. Either way, this is SPX for the week. It looks like it's too much, right? I don't see like the stuff I need to see. I feel like the white gives me what I need. But either way, this is where we are. This was last week. Basically ended the week on a hammer, which can indicate there may be a little more upward movement coming. We are at kind of all-time high-ish, but we still could go a little higher. Let's look at the daily chart. Daily charts show you what did the days look like. These are the 5 days from last week. We had a little dip, baby, and then it popped right back up. Friday also ended on a hammer. So again, that's a little bit of indication that there may be some more upwards movement here. Let me put us a little line here though, because I do see some resistance right there. And if I go to we got a new month. This is a new month, new quarter. Basically, new. I need to get the scale in another color. Otherwise, I'm not going to be able to stay with this because I can't see the other things. And I need to be able to see all the things. Canvas, the text. Maybe that's what it is. Let me change the text to white. Yeah, look at there. I'm so smart. Yes, you are, Alyssa. You are so smart. Okay, so that's what this is, the monthly chart. This is the monthly chart here of how we ended the month, or ended this month and basically started the next one. So we ended the month on a hammer. We ended the week on a hammer, and we ended the day on a hammer. Well, y'all want to say, keep with me, full time frame continuity to the upside. Maybe there may be a little bit more upwards movement. Not saying that's going to be like we're going to run forever, because nothing ever does, but it does say that there's a little bit more upside. That's potential. I do see that we have a bit of a resistance here though in at 57.63. We do have some resistance, so we're not too far from that. So that may be a slowdown area, right? Maybe a slowdown area. Alrighty, that's what happened on SPX last week. Let's go see. Where's my mouse? There we go. SPY is going to look very similar. Right? Exactly similar. If I'm honest, looks like the exact same thing, right? That's SPY. Let's go look at triple Q. Triple Q, too many Q's in the typing. Okay, nope, not QQ. I need 3 of them. There we go. Q. Okay, triple Q. It's not at all-time highs. This is the daily chart. This daily candle looked like it was a little bitty little thing, kind of a doji, but a doji that closed towards the top. It's red, but it closed right at the top here, close to the top of the candle. So that's what we're working with there. This line up here is like an outside broadening formation. Let you know there is some more room in the broadening formation before we get ourselves back to the top up here. And it will, the magnitude is it will try to get to that broadening formation. So we do have some resistance here at 493, but there's still some room, maybe a little of a slowdown, maybe want to pull back there, but it still wants to go on up a little higher. It wants to go up a little higher. Okay, that's triple Q. Let's look at IWM. IWM's kind of looking similar to triple Q. as far as that little, what this candle looked like. We did have a gap here that didn't fill. It got a portion of this gap got filled, but not all of it. Let me see if I can make the gap a little bit lighter. Let me get some. Is my gap purple? I guess so. No, that's the text. I need the gap to be the rectangle. Maybe I'll lighten it just a little bit so maybe we can see a little bit better inside of there. There's a little line in there, a little wick. Maybe y'all can see it better there. Yep, there's a little wick here on the candle. Went down to maybe the 25, 30% mark, but there's still some left there, right? We've got some resistance up in the 220 area. This is IWM we're looking at. And now this zone here is going to provide some support. Got a lot of lines on this chart. We did a thing during our charting challenge where we started at the top, like monthly, then weekly, and then daily. We did our charting for several time frames, and that's how I ended up with so many lines on here. Hey, Ward, how you doing? Hey, Raymond, good evening. So that's how we ended up with that. That's what happened with IWM. Still got a gap down here to fill. It's a minor, I wouldn't really call this a hammer. This really, in my opinion, is more of a doji, but we do have some, it's red, but we've got, it basically opened, dropped down here, went up there and came back and closed right near where it opened. So not a whole lot of movement happened there, but we did have that to go on up. I think we can probably get rid of this gap. Looks to me to be filled, and so does this one. Once the price action, but then there's one down here. Once the price action goes through it, we can consider it filled, but price action hasn't gotten down here to this one. What's remaining is 213 all the way down to about 211, a little bit over 211. That's still waiting to be filled. And for this gap, we've got 217 to 216. There's some room in there that's still waiting to be filled as well. If we're looking at IWM, we're kind of on a downwards trend right now. I'm trying to bring it back together so we can see more of it at once. But it's really been kind of, hanging in the zone for a little while. It ran up and popped up to like 223, 224, and it's been pulling back ever since then. Maybe it'll come on down some more, grab some more of this gap. And then this one, if you look really between the 224 and the 207 range, it's just kind of been there. 206 has just kind of been there for a while, right? This was August. It's been there since the mid part of August, dancing around. It's moving up and down, but it's just, moving up and down. I'm going to see a higher time frame and see if there's something there's a reason why it's all inside of something. Looks like there's a mother bar here, and all this price action is dancing around inside of that bar. But you do see it seems to be consolidating and getting tighter. And as this happens, it gets tighter, tighter, tighter. At some point, it blows out of here, top or bottom. So, it's one of those, you can call it all the things, a rising wedge, a falling wedge, all the things. This actually, I don't know if this, there we go. This goes here. There we go. Got a little bit of a wedge, a flag, wedge, a triangle that's getting smaller and smaller. That's what's happening. A triangle that's getting smaller and smaller is happening. Okay, so that's what's last week. That's what we had last week in the various tickers. Let's go and look at our other things. We've got earnings that we must check out, and then we've got meetings. Oh my goodness, the meetings for this coming week. Ooh, my. Okay, here's our earnings coming up for this week. We've got nothing's happening Monday morning before the open, but we've got Duckhorn Monday after close. We've got PepsiCo before the open on Tuesday. Accolade Tuesday morning. Saratoga Tuesday after close. Helen of Troy is before the open on Wednesday. Berna also. AZZ is after close on Wednesday. Applied Blockchain, APLD, is going to be Wednesday after close. Bassett, E to open, and Richardson Electronics. Thursday, we've got Tilray, In Delta, the airlines, we got Domino's Pizza, Thera Technologies, and Neogen. And then Thursday after close, we got AEHR. And then Friday before the open, JP Morgan, Wells Fargo, BlackRock, BNY, Fastenal, Bank 7. So what does this show you on Friday? That shows you that Friday opens the banks open up the earnings season yet again. Okay, so now we're getting into fourth quarter earnings, and the banks, I was going to say the banking season, but the banks start to lead the charge. They lead the charge into earnings for the new season. So that's going to be this coming Friday. Okay. That's what will happen there. Let's look at our FOMC meetings. It's a lot. I might as well call it the FOMC week because there's so much happening this week and almost all of it is FOMC. So let's go look at it though. There's a lot happening over here. Come on. I need this a little bit smaller so it can fit in there. There we go. So Monday, notice we got all this FOMC. Monday at 1 o'clock, FOMC member Bowman and then Kashkari at 150. Consumer credit month over month is 3 o'clock. They're showing this as a yellow folder, but consumer credit is probably orange, right? They're watching to see how are people managing their credit. And then 6:30, we've got FOMC member Musalem is speaking. That's Monday. Monday, we've got 2 in the afternoon, consumer credit at 3, just before power hour gets going underway real good. And then 6:30, markets closed. Tuesday, a lot more FOMC. Kugler is speaking at 3 o'clock, right? Or 3 a.m., a.m., which is before we actually are awake and know. That's when people who are trading futures can see all that. NFIB, I don't know, is future open at night? Yeah, because the futures market doesn't close. NFIB Small Business Index, 8:30, trade balance. This is all before the market opens. RCM tip economic optimism is tentative. At 12:45, we've got FOMC member Bostic and speaking, and then Collins speaks at 4 o'clock. Markets closed by then, but Collins speaks at 4, Jefferson speaks at 7:30. Wednesday, 8 o'clock. Bostic speaks, 9:15. FOMC member Logan will speak. Right? 2 more coming before market opens. 10 o'clock that same morning on Wednesday, final wholesale inventories. 10:30, we got crude oil inventories and FOMC member Goolsbee will speak. 12:30, Jefferson speaking. Again, he spoke, previous day in the evening, he or she, and they will come back on Wednesday at 12:30. 10-year bond auction. This always shows as a yellow folder, but really it's orange. The 10-year bond auction is something that will invoke some volatility, right? On 2 o'clock, we got FOMC meeting minutes. We got minutes coming out Wednesday at 2 o'clock, and it's a red folder. So we'll see what happens there, right? FOMC meeting minutes always moves it a bit. Yes. Collins will speak at 5 o'clock and Daly will speak at 6. That's after the market closes. Thursday morning before the market opens, we've got CPI, right? I'm going to stop here and pause for the calls and say anybody who's trading those 1 DTEs or whatever, CPI, this is that time of the week or time of the month that we take a pause, and then we go back because CPI and PPI, which happens the next day, can blow your good trades out the water while the market's not even open. You can't even do anything when the market, this data comes out at 8:30. You're basically waiting until 9:30. Your trade gets blown, and then you're like, no. So these are the times for those of us who do the triple Q and IW. I do triple Q and IWM. Some people do other things. But I pause those when we've got CPI and PPI. I used to not pause those. I used to let them run, and then I'd be the day of these things managing my trade. So I'm saving myself. Save yourself. I'm saving myself. And I'll just pause them for those 2 days and then I'll enter again on Friday for next Monday. I'll do it that way. Okay. That's how we do. Thursday, CPI in the morning before market opens. We've got some FOMC member stuff going on as well. 30-year bond auction. Friday, we got PPI. Goolsbee will speak. University of Michigan, Logan, and then Bowman. This is all happening on Friday. So you can tell we have a full week of meetings and stuff for Friday. Okay, got a full week of meetings and information, CPI, PPI, 10-year bond auctions, FOMC member people, all the things are happening. Okay, y'all ready to clap it up? Clap it up. Boop, boop, clap it up. Clap it up. Yes. Last week, trade ideas, 26 out of 31 profitable trades. 84% win rate. 84%. And even the ones that I'm not calling them profitable, they weren't, I mean, you didn't lose. 3 of these were break even, right? IYR, Microsoft, and TJ Maxx were all partials. And the Chevron hopped up and get ran. And y'all know why Chevron got moving? CVX got moving because energy is bullish for war. All right. So Chevron is an energy oil kind of thing. And so when we had all the issues last week, then Chevron got on a horse and got moving, blew right on through this called credit spread. Even though energy has been bearish for a minute, it now picked up. And Tilt TLT also closed at like 98 and some change. So it, no, it was 95 and some change, because this is a put credit spread. It closed at 95 and some change. And so that one was breached. Of all these put credit spreads, only TLT is the one that got really breached. These were partially, but they still would have been break-even trades. And then CVX was breached completely. Google, Mark, and Merck did fine. Iron Condors, they did fine. Woo, woo, woody hoo, did fine. All right. So 84% win rate for last week. Yes, yes. I put out a video last week. Well, no, today. I put this out today. Last week, my video was about the flow. I did a video about flow, and I mentioned it and talked about it on my morning call last week, the one about using options flow, where you can see real time where is the big money putting their money, right? That was last week. But I also uploaded today this video about the best trade entry, because you can do your research. You can do your looking. You can decide, I want to enter blank, right? And you know what you want to trade. You have an idea of what you're going to trade, but what you don't have is when, right? And it matters. It matters. As a seller, you get a little more, you get more leeway as a seller, right? I'm putting the video link in here. The best trade idea. Okay, trade entry, best trade entry video. I'm putting that in the comments. So you can it matters. As a seller, not so much, because all we're looking for is where price is not going to be at our strike. It would be better as a seller if you were able to get in when it's close, rejects off of support or resistance. That's going to be better for you to get more premiums. But as a seller, entry time, like the specific minute you enter, isn't as important as it is for buyers. If you're a buyer and you want to know, you want to get into a trade, you need to get into your trade at optimal time. So in the video, I do talk about them both. Okay. I do talk about both things in there. So that way you'll know what is a good time to enter your trades, whether that is as a buyer or as a seller. All right. I don't know what's going on with that Instagram screen, but I need to keep it pushing. Let's escape out of here. There we go. Y'all can still hear me, right? Everybody is still here over here. I'm not sure what happened to the Instagram screen. It's tripping. Okay. So there we go. There's the best trade entry video. It's on my YouTube channel. The link is in the comments, and you can go ahead and take a look at that. All right. Now let's look at this week's trade ideas. This week's trade ideas. We got a good little number of put credit spreads, which means a lot of things are bullish. A lot of things. See all these trades? A lot of things are bullish. We're going to go through some of these. If you see something on the list that interests you, please go ahead and put it in the comments. So I'm going to look at some of them, the ones that are on my mind, but I want to know what's on your mind. Which ones are on your mind? And if you don't see your ticker on here, then just let me know. We'll still add it to the list. We'll still add it to the list. But I want to look at Home Depot. Right? I want to look at Lowe's. Those two should work together because we are in the time where we're in hurricane season down here. It's raining outside right now, and some kind of tropical storm is on the way. But Home Depot and Lowe's, I know my husband went over with our neighbor today to get a generator. Her husband just left to go to his duty station, and she wanted to get a generator. And when they went to Lowe's, she said there was not Lowe's. They went to Home Depot. There was not one. There was not one. Nope. I'm gonna look at Philip Morris. I'm gonna look at the Q's. I'm gonna look at Spine. What else do we want to look at? I don't see any comments coming into the chat. Do we want to look at Walmart? I'm looking at all the bullish ones. Let's go look at some bearish ones. A little call credit spread is hiding over here by itself, so I'll make sure to include Merck also. Walmart, I got 79. Spy. 569. The triple Qs is 482. Philip Morris. Bristol Myers is on here. Bristol Myers, I may do that one too because they haven't showed up on our list in like ever. They have never showed up on our list. So Lowe's, what's that? 262.5. And Home Depot is 400. I like to always do, if I can, the iron condors as well. Microsoft is on here. Microsoft 405p and 425. Pfizer, I know, doesn't pay too good of premiums. Procter & Gamble. I don't think I knew Procter & Gamble was that expensive, even though we've looked at it multiple times. And then Tilt. Generac. Yeah, Generac was on. You want to look at Generac? I did see. Yeah, we were at Home Depot. It's been a while, but when we bought our generator before the last hurricane, and we went inside, and Generac had that big monster thing you sit outside your backyard, and I think it's $7,000 or $8,000, might have been $10,000, that can power your whole house as a generator. So once if something happens with your power, that Generac kicks right in and picks up from there. And it's like, and of course my husband was like, yeah, we should, we need something like it. It's like the men in the toys. We need something like this. I was like, no, we don't. No, we don't. I don't need anything like that. I don't need that. I don't need that. I don't. Okay. Let's look at the weekly chart on Generac. As far as he was like, yeah, this is the kind of stuff you invest in. Yeah, I know. I already know what you're trying to get at. It's just, I'm good. I'm good on that. Okay, we're looking at the weekly chart I put us on. This last week was green, and it's been green for a little minute here. Probably because of the fact that we're in hurricane season or storm season, and these are just the times when these babies start to get on the radar of the people. They start to get on the radar. Actually, I should make it on that one, but I'll leave it there. I need to extend that. Oh, there it is. Go up here. I need the right extension. It doesn't extend like that. I need the extension. Okay, I guess you just grab it and extend it yourself. That's how you get what you want. You just do it yourself. Okay. Broadening formation, let you know. Okay, it's close enough. Where we could be doing on the weekly chart. Swing low, swing low, swing low, swing low, swing low. Okay. There we go. That's a sub broadening formation there. Support resistance. Where did I put that? Why did I not put that there? Okay. This is the weekly chart showing our support resistance. I would say, what would you say? I would say that Generac is a little bullish. Yeah, I would put it in the bullish category. So that means we would look at a put credit spread. This is Generac we're looking at. Yeah, not at those prices, Ray. I was like, okay. When somebody have one, tell them to invite us over. When the power goes off and somebody you know has one, tell them to invite us over. We'll come over and enjoy their power. Okay. This is the daily here, Generac. Let me see if I can get want to make sure to get Thinkorswim open so we can go look at what would be some good strikes. What I see now though is maybe 157, 157.50 based on this support that's here. It ended last week. Well, sorry, the day. It ended the day on a hammer, which could be a little more upwards moving. Let's see what it ended the week. The week is just a 2-2 continuation. So let me turn my numbers back on. There we go. Turn my strat back on. Okay, that's a 2-2 continuation. And it's really, these are kind of hanging out inside of this big, all of this almost is inside of this big three, which is the mother bar. So it's just inside of here. It needs to, it could potentially keep going up here. It could potentially pull back some, but you do have, some room. It's kind of toward the upper middle, not the middle of that. Okay, come on, baby. I must have typed the password too fast because Charles Schwab is very sensitive to the password, making sure you don't get in without proper entry criteria. Okay, 151. I also see once this opens up, I'm going to be able to see a better thing. But I know it. I really would go with a put credit spread and looking for supports. Our closest support is 157. Our next support is going to be down here at 151. Oh, now let's go to the daily chart. I'm putting stuff on the weekly chart. Let's go see what the day holds. I was wondering why there was such a big gap there. I needed some more data. Okay, let's go. We've got a gap here that still remains to be filled. Still needs to be filled. Green. There's some support in here. Let me switch over to the line chart. Yep, see how we're right in here. Anytime you see these peaks and valleys, that lets you know there is some support and resistance in there. Let's move this up a little bit. Okay, that's about 155 is where that is. Thinkorswim is still opening. I would look around there. So we're at, this is $150 stock, probably got a plus or minus of about 4 or 5 for the week. We'll go see here in a minute and look at exact strikes. But Generac could be, it's been dancing, been doing the snake dance here. So we're up a little high, but I was going to say an iron condor might work, but I would stick with the bullishness first because we don't know what's what is to come. We do have the top at 169, 170. This was a very hard hit and it dropped right out of the 169, 170 zone and fell down hard. So this lets you know back here that 170 is a very strong resistance area. So you could potentially go above there and get what you need, right? Let's go see. We got GNRC. Generac. Going with the 11th, put us on the single chart. If we go above the 170, we got plus minus 6, putting us at 170 definitely puts us above that. That's an 82% probability out of the money. And if we were to go down, we're, subtract 6, we're at 154, somewhere around there. I would probably go with 152.5 just because I'm actually probably would do the 155, but I won't suggest that to anyone. 152.5, 150. This is a 2.5 spread. 150, 152.5. As of today, market is closed. It is paying $27. If you were to go up one more, 152.5, 155, it's paying about $45. And with it being as bullish looking as it is, I would probably be okay with that. And then if we looked at the 170, 170 is not really going to pay. Oh, what? No, $87 at 170. That something's wrong there. Let's see. That was a lot of money for 10 points away from current price. I don't know about that. 167.5 is paid. Yeah, something's going on with the option chain with it being closed. Because when I picked it, it jumped to $87. It's not going to pay $87 for a 2.5 spread. But let's go see what the next one shows. Next one shows $5. Yeah, it definitely won't pay $87. It's like, whoa, Nelly. Whoa, Nelly. Okay. But I will write on here where I do see call credit spread 170, 172.5. Okay. And put credit spread, what did I say? 152, 152.5, 155. Yeah. PCS 152.5, 155. Of course, none of this stuff is investment advice. I'm just showing you some stuff that I see and you can see. This actually 155 puts us below a couple of supports. You've got support here. You've got support here at the 155. So you've got some stuff that could potentially hold you. Never going to hold me down. It could potentially hold you down. Okay. Let's go look at Microsoft. There we go. Microsoft is on our iron condor list. I hope that helped you out, Ray. If you're looking at Generac, you can actually do potentially an iron condor. Pull in, I don't know what the top side is going to pay, but at least the bottom pays 27. Even if you took in another $20, that gives you $47 or 50 for a 2.5 spread. That's a 20% return on your money. Yes, it is. Yes, it is. It is. Okay. Looking at Microsoft, which is on our iron condor list, and it's there because it's showing as neutral. Maybe because it's been doing this dance, doing the dance. And we currently have 425 on the call side and 405 on the put side. 425 is going to be based on this resistance right here. It's going to be based on that. And our support is going to be based on what's happening right in here. Okay, it could be right in there. Let's do a little right here. See what we got on our call credit spread. We've got 425, 427.5. I believe it's a 2.5 spread. And then for the put credit spread, well, I'm not sure why I did that. Put credit spread, we've got 402.5/405. I don't know why that disappeared like that. I put it right there, CCS 425, 427.5. Okay. And that's supposed to say CCS, not VVD. How about we do that? How about we type in the right thing? Type in the right thing. All right, so let's go Microsoft. See what kind of money we could take in from Microsoft. 2.5 spread. 405, 402.5 is going to, at this point, market's closed, $28 on this side. And, I can go ahead and turn that. I'm in my sim. I was going to go ahead and put these on. Okay, I need to put it on good till cancel so that in case it doesn't pick up tomorrow, it will pick up a subsequent day. And then I said 425, 427.5. That one's paying $54. Ooh, that's because it's going up a little bit. And you put that 54 with the other 27 or $30, that's collecting $80. So that's a 30% return on that money. Yes, sir, Bob. 30% return on Microsoft. Ding, 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 ding. Ding, 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 ding. Microsoft. Might be, could be, might be possibly a good trade. Okay. Microsoft. All right. Microsoft. Then we had Procter & Gamble was our other one that was on the Iron Condor list. Why do y'all think I look at Iron Condors? Where do you think I look at Iron Condors? If you got an answer, you can put it in the chat. Why does she look at Iron Condors? Why does she always focus on those? What's the deal, Lucille? I can tell you if you want to know. Why, oh, why would she focus on Iron Condors? Reason being, as they say, look, let me get me a thingy here. Reason being, when you're doing an Iron Condor, you're only using one set of collateral. So if you're doing a 2.5 spread, then you're using no more than 250. Yep, Iron Condors can double the money. You're using no more than the 250. It's 250 for collateral, like on the Microsoft trade, 250 for collateral. Take away the $30 for the put credit spread side. Take away, I'm going to do a little thing right here. I'm not on the Microsoft screen, but y'all going to be able to see it. So 250 is the collateral, minus the $30 for the PCS, right? Minus the $57, I think I said, was the CCS, right? Which is that's $87. So we're only spending what, $163? $163. You're not spending anything. You're $163 is your collateral. I'm not sure how I'm spelling collateral, but here we go. 250. So if you were only doing the one side, you would collect 30 and your collateral would be the other 220. But if you're doing a put credit spread and a call credit spread, which is an Iron Condor, if you're doing them both, I might change this to a different color, so everybody can see. Let me make it white. There we go. And I may even make it bigger. Right? So if you're doing just one side, you're going to take off the 30 they're going to give you, and you're going to put up 220 of your collateral. But if you also do the call credit spread and put up, and they give you another $57, which they give you immediately, you're going to have $87 total given to you, which means your collateral is only $163, and you've taken in $87, right? That's why I like Iron Condor. So that way you can see, you can collect more premiums without putting up more money. You can collect more premiums without putting up more money. That's why I look at those. Okay. So looking at Procter & Gamble, PG, 165 and 172.5. 165 actually is down below this support. 165 is going to put us down here. 172.5 puts us above these, right up in this zone here where there's a little bit of stuff happening up in here. All up in here. It's stopping and doing, right? Yeah, we can look at the up and turn back around. This probably would be the full extent of the zone if we wanted to really, be a little more specific about the zone. There would be B, right? There's a gap here that I need to put a thing on. And this gap is also going to provide some resistance for us. The gap goes from 172.48 all the way up to 173.07. So that's where that 172.50 comes in, is right there. It has to get in there, and gaps provide resistance. Gaps provide resistance. Okay, so let's go look at Procter & Gamble. I was talking about Microsoft, but let's go look at Procter & Gamble so we can see what kind of money Procter & Gamble is going to bring in for us. 165 is what I have for the put credit spread, bringing in $15. I'm not a super fan of that at this point. That's not quite 10%. We want to bring in more than 10% on either side. And then 172.5 is another 20 cents. So $36 you're going to bring in for 250. Now the premiums on Procter & Gamble aren't necessarily very high for all the reasons. The main ones is Procter & Gamble is not volatile like that because it gives dividends. It gives dividends. So it's not a big Wah, wah, wah. It's not doing all that. Y'all just saw on the chart that Procter & Gamble doesn't do that hard movement like some of these other ones do. Nope. Doesn't do that. So premium's about $36 for Procter & Gamble for that iron condor. Joy J says make money if a ranging market. Absolutely. If the market is ranging and kind of just hovering in here, then you're gonna make money when it's just ranging, right? And those inside bars work for the iron condor people. Ray says because if they're in a range, you can make money on both sides. You got it right. You got it right. Okay, I checked out Microsoft. I checked out Procter & Gamble. And let me go to a bearish trade. I'm going to go with Merck. Merck has been on our list several weeks now. It has showed up on our list for several weeks. Let me get us some little pluses. Get a little bigger. Right? Let's see what's going on back here on Merck. So even though it's showing that this is the daily chart. So Friday, it did seem like it hit some support and wants to go the other direction. But let me go back and look and see where that could possibly be coming from. Okay, the bottom of this candle 109 and some change is right in the middle of some momentum. So, yeah. There's something called, and this is the two, I was thinking about the level of reclaim, something called a level of reclaim, which basically when the price reclaims a zone, then the thought process is that it will continue through that zone until it's finished with it, basically, right? This gap was a gap, but it got closed. If you look over here, the gap got closed with these last few, and it went through twice. Doom, doom, doom. Okay, let me try again, and then let's stop. So the thing can stay. It went back up and has come in, dipped a little bit, and came on through this time. I don't really see support back here, but let me turn on to a line because this is all momentum, that candle there, which means it may not stop right there. Stop right there. No, it might not, because there's nothing back there that's stopping it right there. I don't know. Let me look back a little further. The bottom here, this is all in the zone. Well, way back here in January of 2023, this zone, and here I see in June of 2023, this zone, and it touched here. So it's touched here a few times. We've got 1, 2, 3, 4 touches. That could be the reason why it stopped there and did a reverse, crisscross. Okay. It's pretty far from the moving average, which means it may try to move back towards that. So this green candle, gave some hope, I guess. But Merck is definitely still bearish. So let's go look at it. I have 112. I have 112 as my resistance. Okay, so let's go see what only call credit spread with Merck. I don't see the bottom part yet because it's not easy to tell where that bottom is. And when it's not clear, you just leave it, unless you're going to wait till later in the week and maybe wait till a day or two before expiration and then see what it's doing for just the week. That means you got enough, you've got some time to see, you got the week's price action to see what happens. But I got 112. 112, it shows here, is paying about $16, 16% return. I do suggest that you close at about 75-80% profitability. So you probably would take off about $13 off of it if you did it this way. Of course, more money you want, you can put on more contracts. That's one way you can do that. Put on more contracts. All right. Let's go next. I want to go look at the Qs. I want to see what we got for the week, because Triple Q and SPY have also showed up on our list for the week. They've also showed up on our list for the week. Okay, doesn't look like this gap has been filled. Not all the way. It's not all the way. And actually, this needs to come down some more. There we go. Triple Q showed up on the put credit spread list because it's bullish. No shock there, right? No shock there. Let me see if I can put us a little trend line. No, that's not the one I want. We're going from the bottom. Come on. Nope, I didn't want that. I wanted a trend line. It's a trend line. Okay. There's a trend line with it going up. I could tap into a shorter one here. I could go with from here to, nope, that's not what I wanted either. I could go from here to these lines, to these candles, showing us it's a little tighter, and that's not inaccurate. Okay, that's not inaccurate because it is, and the price went off, came right down to that line and returned back from whence it came. So this could be going right up into here. Shoom, 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 shoom. Anyway, what I got for the Qs is 482 for the weekly. You know what? Wait a minute. I did this last week. I did the same thing last week. I looked at the next day and I may not have gotten the weekly number. I'm going to have to fix that now that I'm thinking about it again. I think I may have gotten the daily number, not the weekly number. I needed the 11th. I think it automatically jumps to that though. So let me see. To what I think, nope, 482 would not be that number because that's 65%, and that's not how close we get for a week's worth of triple Q riding. No, sir. Okay, so triple Q should be 476 or 477, somewhere. We got plus or minus 10. I would go with 477. No reason, or 476. No reason to be fooling up with triple Q if you don't have to. 476, 477. Let's look at what that money looks like. 476, 477 is paying about $16 for the week. All right. Now it's, kind of telling that right around this zone, there's a 0.5. Nowhere else or further up, there's one, but mostly triple Q is a one spread. We get a little bit further away and it becomes a 0.5. That's not, no. Let's go look at the chart again real quick. Let me see what we got for supports. 479.65. This is actually the top of that gap is a support, but this is a support here. 479. I was talking about using 477. And then you also have the bottom of the gap, which is 474. That's actually a pretty good sized gap. Part of it's been filled. On top of it, 478. So if you were feeling a little more froggy, you could be feeling a little more froggy if you're looking at the single chart. Probability out of the money, about 75, is actually 478. If you wanted to be up one more closer, you can do 478. And then 477, 478. What I find, not so great is the fact that you can do, a week's worth of triple Q for $17, but you can also just do one DTE and probably take in more money. But one DTE is going to be a little more risky because you only got 1 day for it to do its thing. If you've got, you're looking at the week, you've got a whole week for it to act right. Actually, that's at 479. So I would probably even I would want to go with 479 because that's $20. Okay, I would go with that. That's 20% return. We could take that for the week. That way you don't have to, quote unquote, worry about it all week long. But just know that 478, 479, or a little further away, safer, 477 is there. I need to change that on our graphic. Okay, which means I also need to change SPY on our graphic. Let's go look at SPY because I did the same thing on that one that I did on triple Q. Let's go look and see what SPY looks like for the triple Q. Ended on a hammer looking thing, but SPY on the other hand is up here at like all-time highs. So, not that it can't move because it definitely can, but just know it's going to have a little bit more headwinds. But that, we've seen that it might bump it and then pull back like it did here. It bumped the all-time high, pulled back, tried to go again and pull back, and it's coming right back into it. This time it may make it through. It just may make it through. So that way you can see it is on the put credit spread list because it's still bullish. Bottom of this support is 567. If you want to go down to the bottom of this wicks, 565. Right, 567, 565. Let's go look at what it is for the weekly numbers, Arlissa. Yes. Yes. Okay. So plus minus 10 also on, oh, this is not triple, this triple Q. I need SPY. I need SPY. Plus minus 10 again, though. So 562. Be down in here, 563, 562. If I go back to the chart, 565. Oh, there's a 561 here. 565 would be the bottom of this number, so I'd probably go a little closer. 565 is per 75. 564. Let me go with that. Put it down. Put it down. 564. I had 569 on that sheet. Ooh, 569 would have been like, are you crazy, lady? Are you crazy, lady? 564. 564 is going to pay about $16 for the week. At this point, the market opens tomorrow. Once the market's open and price starts to move around, you may see that this number changes, right? May change for sure. Okay, so I got those two. Got those two. I said I was going to look at Bristol Myers because we've not looked at Bristol Myers ever. I don't think I've ever charted Bristol Myers, but it's on our list. It's on the bullish list. It's got it picked up and decided it was ready to go. I'm ready to go now. It's ready to go. I don't know if this is all-time highs. Nope, it's not. We've got some resistance back here at 54. It's currently at 53.96. Yep, this whole area would provide some resistance. It's been on the move, though. It's been moving. I like to move it. Support. Let's see what we got for supports. I got lines on here, so I must have charted at one time or the other. One time or the other. Yep, that's all. Momentum looking. $50.18. And what I have is 52. I have 52 as support. So let's go and see. 51.52. $5. Nope. It's going to have to pay more than that. If it doesn't pay at least 10%, don't fool up. Don't fool up. I think Bristol Myers also does dividends. That may be why it does not very volatile. It may not have a whole lot. But listen, if it's not going to pay at least 10%, nah, bruh, we good. We good. Because you don't want to put your money, your collateral out to risk unless you're sure you're very comfortable with how it moves. If you're very comfortable with how it moves, then yeah, you can do that. You can do that when you're real comfortable with it. Okay. This is Philip Morris. Philip Morris. Another one. You see, I don't have any lines on here because I know I haven't ever charted this one. Let's go to the weekly chart first and see what's looking here. See what it's looking like. We've got a little top area here where it hit and pulled back 124. Got a little zone here where there was a slowdown. Another zone down here, 101. Let me make sure I'm not missing something in the middle. Okay, this is the weekly chart. There. Now we can go to the daily. Back to the daily chart. They've got some resistance. Philip Morris is on the bullish list. Definitely come down there and bumped around right here. Shoot. Gone, baby, gone. I've got it 117 as our support area, which is based on right on this right here. I could actually pull this here. It's 6 o'clock. We got a few more minutes. 117. Why does that say zero? $17 it's paying for 117 for Philip Morris. Philip Morris. Do we want to look at Home Depot and Lowe's? I know Home Depot's been doing real well. Can't go to that chart. It's got pieces and parts. Home Depot had a nice little dip here, but it's got that would be called a hammer. This would clearly be called a hammer. Okay. Came right down here to this support area or resistance where it was here, and went right on back the other way. I've got 395 slash 397.5, I think is the 397.5, 400. 400 is our resistance area or our support area. And you see here, even here, about right down to there and turned around good and hard. So let's go look at 397.5, 400. Paying $40. Paying $40 on a put credit spread on Home Depot. Bullish. And then Lowe's. All right. Well, you just don't want to do right. Here we go. Stay with me. All right. And Lowe's had a pullback from 272. It also dropped right down to an area, or it dropped and almost filled this gap. There was a gap here. Close of the candle to the open of the candle, and then he pulled back off of price action. Actually, the gap got filled right here. So no, it didn't. That gap was filled previously, but it was filled in just that day. And this one came back down into it a little bit and turned it around. Alrighty, for Lowe's, I've got 262.5 right here at the bottom of this, where this support is. 262.5. Lowe's is paying $34, 2.5 spread. That's bigger than your 20% request or 10% minimum that you should take on these. Yes, there are more storms coming. This one that's threatening to come now is threatening to come right across Florida. Threatening to come right across the Sunshine State. And it's raining right now in anticipation. Oh, look at that big old gap on Walmart's, as they say. A big old gap here at Walmart that's from 68. It looks big. From 68 and some change, 68.43 all the way up to 72.49. That's that gap. I don't see many more here. Close, open. There's actually one here. The close of one candle to the open of the next would be a gap. That one, the close of one candle to the open of the next. This would be another one. Color change is a place where you could potentially find these. Close of one candle to the opening of the next. That price action on that one closed it back up, though. I see this wick actually went through that one. So that one's finished. The wick finished that one off. Close to the open, price action. Close to the open, subsequent price action. Got that one. Close to the open, all this price. Okay. So we do have a little gap down here that will need to be filled on Walmart. Walmart is on the bullish list. It's on the bullish list. 79.72 right there. And we've got 77.94. And we've got a stair step going on up. Stair step stepping all the way up. I have 79 as the Walmart strike. 78.79. Pays $8. It needs to do better than this. Not $8 today. You can check it out tomorrow when the market's open, tomorrow or Tuesday. Remember, when you are entering these credit spreads, your optimal entry or your best entry for these credit spreads is to wait till they come to support. If you're doing a put credit spread, wait till it comes to an area of support and rejects. Comes to support and rejects. Then you want to enter as it pulls out of the station, basically. If you're doing the call credit spread, wait till it goes up to resistance and rejects. And as it pulls back down, then you can enter your call credit spread. If you're doing an iron condor, you can enter it all at one time if price is hanging out in the middle. Or you can enter them separately by saying, okay, when price comes down to hit support, I'll do the put credit spread. When price goes up to hit the resistance, I'll do the call credit spread. That way you're getting the most money on both sides, and it becomes an iron condor. You don't have to enter an iron condor all at one time. You absolutely can, right? But you can also wait till it resists, wait till it rejects support, wait till it rejects resistance, and then make that be your entry. Two different entries will still make it an iron condor. Okay. All right. So I did tell you all that last week I've been using this trades journal, right? It's a place where you can write your trades down, what's your watch list for the week, what are you, and I believe I put the link in the comments, but where are you looking at for your trades? What's your watch list look like? What's your entry criteria? What are you looking at for entry? And then actually, what did you actually do? I found that using that last week, hey Tanya, helped me to see that I'm still looking at too many things, and then maybe taking more trades than I should be taking. So as I'm writing, I've been writing stuff down for a while, but now that I put it all on one sheet for the day, I'm really seeing that it's all in one little spot. Okay, so whatever trade journal, and I don't have it in here. I've started, I got my trades journal too, where I'm actually going to be writing in my notebook more. This is an area of development for me. And I want you to be able to write your trades down, because when you can journal and write your trades and keep track of what you did, you can figure out what you did, and you can see what you need to change and what you need to do different. All right. So this is a free trades journal. You can grab hold to that. The E2T membership is open, always open. We just wrapped up the charting challenge. Well, actually, we got one more session of the charting challenge. Yesterday, we did like a practice session, worked on people making sure they've got all their indicators they wanted on their charts. And it was a very good session yesterday. Then my power went out toward the end of it. My power went out, and then they had to close it without me. But that was yesterday. But the charting challenge for the month of September has been phenomenal. Oh my goodness. I got something that's coming up it's going to start November 11/11/11. I can't tell you about it just yet, but I'm so excited about what's coming next. So y'all keep your ears tuned to what comes next. All right. But the membership is open. You can join us in the membership and come on over there. We're doing mostly selling things, but we're really leaning in. I really focused us more on the charting related things, because charting can go for buying and selling, and many people are doing both. They're buying and selling. And if you are charting, you're doing good technical analysis, you can then definitely increase your profits on either side, whether you're a buyer or a seller, a buyer and a seller. You can join us there at bit.ly. Actually, you can just go to educatortotrader.com, easier that way. Everything is there, educatortotrader.com, and join the membership and look at all the other courses I have to offer. We've got credit spreads, we've got the 0 DTE stuff, I've got covered calls and cash secure puts, and there's all the things. There's the charting things, there's all the stuff. All the stuff. Anyway, I wrote this book and released it several weeks ago. When do you use credit spreads versus debit spreads? It's a $588 download. You can get the download immediately. It's $588 is not the worth. It's definitely worth more, but I wanted it to be something that was very easy to grab hold to, where people wouldn't be like, I don't want to pay a whole bunch for a book. I'm telling you, this one's going to give you what you need, and you're going to feel like, yep, she definitely should have charged more for this. All right. The other thing, the copy of spxplaybook.net. Those people who are trading 0 DTEs, SPX, XSP, even if you're doing RUT, you're doing IWM, you're doing SPY, you're doing triple Q, all of these can be utilized with this strategy. Some of them, if you're talking about the open and closing though, because it's 0 DTE, it will be better if you use the cash settled ones. I actually offer a piece of information about how to use the PDT hack, so you can hack the pattern day trader the pattern day trader criteria. You can kind of hack that and still be able to do day trading without using up your day trades. Okay. That's all inside this book. You can get it at spxplaybook.net. All right. So that is the extent of what we have to offer. Next week in the market, we've got a lot of FOMC people. We've got CPI. We've got PPI. You've got 10-year bond auction, okay? So FOMC meeting minutes. There's going to be some volatility toward the middle end of week. So definitely be prepared for that, right? I want you to take some time, look at the different stocks you think you want to trade, do your good charting, right? Just decide where is your entry criteria, put alerts on your chart to let you know when the price gets there, and then try not to overtrade, Arlissa. Try not to overtrade. All righty. I want you all to have a great week. I'll be on tomorrow morning at 9:45, right? And we're on every morning at 9:45. And I want you to do two things this evening. I want you to stay green and I want you to get this money. And part of getting this money is doing your homework, which is looking at these charts and making sure that you're ready for the morning. The money in the market is not made in the market. It's made on the weekend, or it's made in the off market hours. All right. I will see you all later. Goodbye, everyone. Bye-bye.